And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Happy Friday, everyone. Friday, September the 17th. I'm John Hoagland. Thanks for trusting me with your time this morning. As always, we're going to be looking for good context, good risk management, and infinite patience today. As far as economic releases are concerned, 9 o'clock, the University of Michigan Consumer Sentiment is due out. Other than that, it's quadruple witching day today. So we've got lots of expirations going on. Sometimes it can affect markets. Sometimes it can be a big goose egg. The outcome is, of course, unknown. U.S. stocks are set to open a little bit lower before consumer sentiment and quadruple witching day today. Though off recent highs and finishing rollover today, the indices have remained largely range-bound all week long, 5 days in range. The Chinese company Evergrande is facing default on $300 billion in debt, has forced the Bank of China to inject $14 billion in stimulus to shore up the country's markets. Markets overseas in China last night were up because of that, of course, last night. Crude production issues in the Gulf has U.S. inventories at the lowest level in 6 years, apparently. Prices certainly supported by that information and awaiting new data today from the CFTC as far as positioning is concerned, as well as the Baker Hughes rig count due later on today. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. Subscribe to our YouTube channel so you can get notifications when we do go live. Peaking a few minutes ago here at the VIX, the dollar index, and the 10-year yield. VIX largely flat at 1881. Dollar index 92.83, down slightly, and the yield on the 10-year up just a little bit at 1.34%. It's Friday. I know I'm going to be eager to make a little bit of money and then hang it up for the week. I've got my casual shirt on here this morning, so I'm looking forward to getting a little bit of lake time actually in this weekend. Hopefully you've got some good plans and you're all feeling well. As always, got to say good morning to everybody. Brian's first one in the room. You win the prize, Brian. Brett, good to see you. Theo, good morning. Ryan, Steve Lee, my man Vince. Jorg, George, good morning. Adrian, good morning to you. Harry, good morning. Bill, good morning. Drew, good morning. Zoraine McKell, quad witching today, folks. Absolutely. We are hopefully preparing for that if anything happens. Greg H., good morning. Laura, good morning. Spencer, BK Reese, Robert, good morning. Trading Research, this intro music scrambles my brain. Yeah, you mentioned that it seems a little bit loud, and we see if we can maybe find some softer music. I'm always a fan of singer-songwriter stuff in the morning if it isn't Led Zeppelin. Scott Matson, good morning. Thank you, Murphy. I got my Friday shirt on. It looks like I'm going surfing or something. Prophet Eon, good morning. It's good to see you. Andre, PK, James, Epic Tetsu. That is a new name. It's your first trip to the Market Forecast. Welcome. Thanks for chiming in and saying good morning. Nelson, Dr. VJ, good morning. Let's do this. L. Chalwell, and Ryan Williamson. Good morning, everybody. Again, if you're new to the Market Forecast, we're glad you're here. We're just looking forward to everybody's success here at Top Step and here on the Market Forecast. And being Friday, I got my coffee. My coffee cup is happy. It's one of those coffee cups that changes color when it's hot. When it's cold, it's asleep. It's hot now and awake. Have a cup of coffee and let's jump into the charts. Let's take a look. Let me make sure I got everything set up right here. We do have solid charts this morning, so and there go the charts. I have captured the gremlin. Maybe we'll say hello to him in a little bit. So here we go. Taking a look at starting at the daily in crude. Now we've got a situation that we've been watching that certainly offered a pretty decent upside opportunity when it broke out on Wednesday. We've got a inverted head and shoulders. We've got the shoulder, the head, the shoulder. We broke out above really kind of above the neckline Monday, Tuesday, Wednesday, Thursday, Monday, and we've seen some continuation to the upside. We were expecting to have some difficulties at this swing high, which we seem to be having, but don't forget that when we measure the profit target for a head and shoulders, we go from the neckline to the top of the head, in this case the bottom, and then we measure from the neckline higher at the breakout point, and this has crude oil somewhere up around $76 or $77. Now, if we continue to have supply issues and anything changes demand to the better, to the higher, we could certainly see that. I mean, we've been there before. We've seen crude oil at $150, and this would be about halfway back. So we lost 22,000 in open interest yesterday. Don't forget, today we are trading the November contract. November, I didn't really check, but I'm relatively confident that it has higher volume than the October contract. You're still fine if you're trading either, but you'd rather be trading the most liquid contract, which should be the November today. So just looking at what we've got here, we have symmetry in the head and shoulders. We've got our high here, our shoulder, our bottom of the head, our shoulder, and we've got symmetry back to where this kind of started. My question is, are we going to follow symmetry, or are we going to follow technical rules, which again would have us looking up at that higher level up there at $76 to $77. Today we've got inside extended trading hours, brings a little bit of structure and context for us for our trading day today. Let's take a look at the 30-minute chart here. Our opening range, probably the high of the regular trading hours session. Trying to get this a little larger for everybody to see. So you can see our overnight was inside the regular trading hour and extended trading hours from yesterday. Very little change in the perception of value of crude here at this point. Our opening range is the high of the regular trading hour session. We were looking at settlement being up here, 72.37, creating an overnight inventory to the short side that is reconciled. We're seeing some selling coming in early in the session, but again, we're in range, we're in value. There's very little change in the perception of value right now in a barrel of crude oil. So while we've been range bound for a couple of days, this is what we're talking about as far as context and structure is concerned. We've established a high, we've established a low. I'll be focusing on those extremes for my opportunities today, especially seeing the fact that the market opened in range and in value. A little bit of a surprise here to see the opening range operating as well as it is this morning. But there are going to be opportunities all day. So I was wondering if maybe the opening range trade might be something that would be feasible for us today. It looks like it has provided a pretty decent 40, 50 tick opportunity so far, but we've still got daytime references with which to lean on to look to limit our risk, and that's really our job here. We will limit risk until we find something that we can profit in, and we go with that. We may come back and take a look at what's going on in crude oil at the end of our time here and looking at the charts. All right, the E-mini S&Ps. 5-day balance, 1, 2, 3, 4, 5. Don't forget, there's a somewhat serious reversal pattern that happened on Monday of Labor Day. We left an island top here. We gapped up to it. We gapped away from it. That's sometimes a very serious reversal pattern. We've seen downside momentum. We're in rollover this week. Expiration is today. That's going to open up a much better vision for us next week in our equities and even in our currencies, because we're no longer going to be dealing with our longer time frame traders focusing on a rollover. They're going to be focusing on making sure they're hedged for anything that comes into the future. So we also have something that is also very interesting. We've got a head and shoulders formation here. Okay, kind of looking at the neckline as last week's low. And we've looked down below it. We've not yet accepted down below it. It's all about that acceptance. So if we do find acceptance and we go to complete the measured move, that puts us down to relatively close to this previous low, pretty close to this swing low. We're looking at a completion of the head and shoulders down around 43.60. That puts us down below this 50-session moving average, which we have not seen for quite some time. Here's that 50-session exponential moving average. It's been supportive pretty much all year long, if we could take a look back beyond that. So this is a pretty serious spot here. It's very interesting to me that it's closing in on weekly kickoff low, which is 44.21. Might be interesting to see an opportunity down there. I'll bet you we'll find some fish. But inside 30-minute chart here. So here's the range that we've been in. 1, 2, 3, 4. Today is day 5 in this range. It's established very obvious visual extremes. Visual extreme up here, extreme down here. We're going to be practicing balance strategies until proven wrong. We're going to be fading these extremes until there's a substantial and accepted breakout outside of this area of balance. Where are we today? Settlement is 44.64 quarter. No real overnight inventory. Opening in range and value. After a day of repair, maybe another inside day today as we wait for information, but anything can and will happen. Be prepared for anything on quadruple witching day, and that said, it could end up being a big goose egg. Nobody knows. Inside the value area, try and stay patient. Balance rules in play. I'm going to be focusing on the extremes myself today. And if I don't get an opportunity early in the session and I want to call it a day, I'm not going to feel guilty about that. I'm not going to trade just because I'm here to trade. I'm going to make sure that the market gives me an opportunity that I can count on, that I can look for, that I can use to limit my risk and expand my profit targets. Nasdaq, again, still 5 days in range, still holding better than the E-mini S&Ps. Okay, this would be weekly kickoff high in the S&Ps, and it remains weekly kickoff low so far this week in the Nasdaq. We've taken a look. We've ventured down below that level, but it's been very difficult to find acceptance. Yesterday on this inside move, okay, we actually extended the range a little bit higher yesterday, but we lost open interest. When we're in the S&Ps, we increased open interest by 13,000. Again, possibly a function of rollover. All right, so balance rules again. We've seen a look in the overnight session at the upper extreme of balance, the lower extreme of balance here. We've got weekly kickoff level and last week's low, which might be somewhat pivotal. I'm going to be cautious about that, though. Looking at the 30-minute charts, we had some overnight inventory to the short side that has now been reconciled. One thing that we see different here a little bit is the S&Ps are in value. The Nasdaq is holding above value. The Nasdaq has been holding better. If we do not accept inside value at some point during the session today, then we may be a little bit more cautious looking for opportunities to short up against the bracket high up here. We're looking for the market to basically look up here, not find new business, come back in to reaccept value, which could possibly push us down near the low of value at some point today. So value area high in our overnight low today, I'm looking at as very important information and levels in the Nasdaq, and I can almost see some fish swimming around in that area if we get the opportunity to take an execution there. Now looking into gold, so we've got our head and shoulders break out to the downside. Okay, measuring from the neckline to the top of the head, our termination is down to this level, which is around 1722 even. Takes us down to lows we haven't been in since the beginning of August. But are we going to actually see that? Well, I mean, I don't see any reason why not to. We had a longer time frame trend line here that was resistant, became support. We've broken through it basically on a convergence day with an important inflection level like the weekly kickoff level. So I'm kind of expecting to continue to look to sell strength in gold until it proves wrong. So I'm going to be cautiously looking to sell strength. What are we looking at in the 30-minute chart here? Initially, our opening range was the low of the regular trading hour session. That did not hold very long. I did not buy that because I'm of the hypothesis that we want to look to sell strength, and it paid off not to buy that opening range. The market opened, took us back to settlement. Maybe some overnight long inventory here was involved in that. But you know, we're looking to basically show and find acceptance inside of value from yesterday. Value low could be an important area for me today. Value high and overnight high also look like they may be interesting spots. Gonna stay patient as we are in value from yesterday, indicating very little change in the perception of value of an ounce of gold overnight. I'm going to be looking to see if we can find some momentum to the downside. I'm going to be looking to see if I can locate a decent trade location to limit risk on the short side if I get that opportunity. See if we can finish that head and shoulders to the downside, because then I'm going to be considering a big market state change, and we'll look at that next week. For the euro, central weekly kickoff location volume was pretty good on the downside yesterday, but we reduced open interest by 4,000 contracts. Fewer and fewer people interested in holding on to this contract right now. It seems to be losing some of its momentum or luster at this time as we are in short time frame control. What does short time frame control mean? It means we're looking to use short time frame levels for our opportunities. Looking at things this morning, the market opened with a gap and closed the gap to yesterday's range, but opening in this gap almost gives an impression like there may be some sort of a repair day, quite possible. If we don't reaccept inside value from yesterday, and I'm not looking at this value area special situation play as an important one, it's not all that big. If we don't accept that back inside value from yesterday, then we may fall into a repair situation that could bring us back to close the gap from yesterday. We open with a gap, close this one. If we can't accept inside value from yesterday, if we keep pushing outside of it, I might look for a return back to close the gap from from the day before yesterday's, which was basically the low of last week's range. Hope that makes sense. Ricardo, yes, we rolled equities last Friday. Equities. As far as volume is concerned, the volume has been in the December contract since last Friday, a week ago. 10-year. This might be the last year for the last day, I should say, for our 10-year. Volume was good on this down move. We did have a pretty decent boost in open interest, 61,000 yesterday. We're breaking out of our coiling energy here. We're also taking a look at weekly kickoff low. If we accept below this level, this could be a pretty substantial move. I see that we have some pretty decent space down to this swing low, and down that even deeper opportunities for continuation to the downside. So today it's going to be all about that weekly kickoff low, which is 132 and 30 seconds. We've been bouncing along the sidewalk here. Looks like we may have found a crack, ladies and gentlemen. Here's the 30-minute chart. Okay, we rejected value yesterday. Did we accept value today? No, we did not. The market is continuing to push to the downside. We've got a couple of visuals in naked points of control to work our way down to. If these are the levels that traders are looking at, they'll drive price there. Where traders are looking, they drive price. Visuals rule in trading. All right. So we got through the charts relatively quickly this morning. I'm going to see if there's any questions that I can answer before we call this a forecast. Micro combine is coming. It's being revamped and it's coming. I don't have a timeline for it, but keep your eyes and ears open. And I'm still working to get back on schedule. I understand that, man. Sometimes if your sleep is disrupted, it disrupts everything. Let's do this. Is there a rule not to trade the day of Fed meetings, or is that an old rule? In step one, there's no rule. In step two, the day of the FOMC meeting, we want you flat before and after the release by at least 1 minute, as I know the rule now. It used to be 5 minutes. I think it's 1 minute now. So there's only a few things that you're gonna want to be flat for. Let me see if I can find them and bring them up for you. Give me 1 second here. All right. I'm going to see if I can get the link so you can know what you are supposed to be flat for here. Okay, here it is. So you know 100% sure what you need to be flat for and for how long. There you go. There is the link. Yes, and you probably don't want to be trading while Jay Powell's mouth is flapping. That is very true and very well put, Spencer. All right. All right, Ricardo caught some of that gold, probably done for the week. Not a bad idea. All right. Hey, late to the party, caught the ES. Thank you for your insight with the market forecast. It's my pleasure, Mr. Keith Abla. Good morning to you as well. All right, let's take our deep breath, and we've got a couple of minutes to prepare for the equity opening. Humble, grateful, and creative today. It's Friday. Make a little bit of money, and I authorize you to take half the day off. Go enjoy your weekend, get rested up, do some homework, look away. Don't forget to look away from the markets. And we've got a whole another chapter to write next week. Today is the last day to finish this week's chapter in this year's book. New chapter next week. We'll take a look at what we see. No recap today, no other events. I will look forward to seeing all of you back tomorrow, or excuse me, Monday on the market forecast, 8 a.m. Central. Be there, be square. Same bad time, same bad channel. I'm going to bid you adieu. Make sure you have a good weekend. Say a prayer for world peace. Get out there and profit today. Trade well, and I'll see you in the pit in just a few minutes. Have a great trading day and a great weekend.